Today's December 5th, and I want to talk a little bit about something that's been updated on the federal registry on what's going to happen now that SAVE is in the Eighth Circuit Court. What are some plan alternatives? What is the legislation that the Department of Education is proposing as a temporary fix while SAVE is being ironed out? What is it that you should do if you are in SAVE? And I want to give a little more details on the regulation, which is in the federal registry, and I will link the federal registry to this video so that people who are policy people or like to see what the rules are saying themselves, they can go ahead and click the link that I will provide. But essentially, the background on income-driven plans is that income-based repayment is the only plan that has been legislated by Congress. Things like income contingency repayment, pay-as-you-earn, and revised pay-as-you-earn have been created by the Department of Education through the Higher Education Act to create ways to streamline repayment for borrowers. The Department of Ed made rules to end enrollment into pay-as-you-earn and income contingency repayment for those that aren't parent plus borrowers as of the middle of 2024. However, now with SAVE and pause, the point of this legislation is to allow people to enroll into pay-as-you-earn and income contingency repayment until a more permanent solution has been sought. Extending the enrollment period into pay-as-you-earn and income contingency repayment into July of 2027. That's essentially what is being proposed right now. So essentially they're saying because of the Eighth Circuit challenges to the SAVE program, their urgent solution is for the Department of Ed through the Higher Education Act, since they can't use SAVE, to allow re-enrollment into pay-as-you-earn and ICR to basically stop the enrollment instead of July 1 of 2024, make it July 1 of 2027, giving the department more time to create a new version of SAVE. They are not taking public comments. They're waiving the public commenting period to fast track this, since obviously July 1st of 2024 has already ended. They recognize that there is ongoing legal work that needs to happen to finalize creating something more permanent, especially if SAVE is not going to continue, right? So they essentially gives the Department of Ed until 2027 to enroll. So I want to talk about if your situation is such that you were on pay-as-you-earn and you re-enrolled in SAVE, and now you're on payment pause, what should you do? Well, if you're a public servant, we definitely recommend enrolling into IBR or pay-as-you-earn to continue your repayment and buy back time that you weren't in repayment to count towards your loan forgiveness period. Whether you should enroll in IBR or pay-as-you-earn, again, definitely depends on, if you benefit from payment caps, what the monthly payment is going to be. The payment cap means that your payment with pay-as-you-earn, there's a payment cap, which means your payment doesn't exceed 10% of your discretionary income, which is a whole formula. I have a whole video. I will link it here on how your payment is calculated, okay? The reason why providing an option such as pay-as-you-earn is so important, and this is what SAVE also attempt to do, is that pay-as-you-earn has no hardship requirement. Income-based repayment has a hardship requirement, meaning you have to have under a specific amount of money to qualify, and of course it depends on how many dependents, so I can't come out and say an exact number, it just depends on your family size to meet this hardship requirement, right? And so programs like Pay-as-you-earn came about so that people could enroll in something that didn't require hardship requirements, so they can get public service loan forgiveness. That's the value of having a program like Pay-as-you-earn. There is no hardship requirement, again, whereas income-based repayment, there is a hardship requirement. Pay-as-you-earn has a payment cap. SAVE does not have a payment cap. So SAVE attempted to bring the best of pay-as-you-earn, revised pay-as-you-earn, and IBR into one plan. And unfortunately, it has now been blocked. And it's been blocked because it's been politicized as Biden's attempt to forgive more borrowers. Another piece of news is there's a lot of lawmakers, especially Democrats, that are pushing Biden to forgive as much debt before he leaves office as possible. There's a lot of people that are on payment pause in a way to get their loans discharged by bar or defense, okay? These are the people that Democratic lawmakers are trying to push Biden to discharge their debt for as many people as possible before Trump enters into presidency, because very much people speculate that one of the first things he's going to do, not day one things, but very early on, is to stop the student loan discharge process, as well as put a permanent end to SAVE, which he can do through executive action, just like SAVE was created. He cannot get rid of income-based repayment. He cannot get rid of public service loan forgiveness through an executive order. That can only be eliminated through a legislative action, which, again, I don't think an entire legislative body is going to get rid of those items, because it does benefit hospitals, teachers, and it does benefit people that do have power in legislation, in the legislative body, excuse me. So I highly doubt that IBR is going to go away, or public service as a concept is going to go away entirely, okay? Those are my predictions. What should you do? I will provide access to our discounted services and coupon codes in the description if you are unsure exactly what to do. There are questions in the last video. I applied out of FFEL, went into direct loan program, went into SAVE, now it's on pause. If they re-enroll in something else, will be taken away, all that. You are in process of getting your payments counted. Any other income-driven plan should still qualify you to get your payments counted, okay? So I just want to make that very clear, that just because you unenroll from SAVE and enroll into some other income-driven plan does not mean that you're getting out of account adjustment. You're just doing it because you're getting out of a program that puts you in continued pause. So if there's no reason for you to hurry out of the continued pause because you're not trying to buy a home or do anything like that, there's no harm in remaining in SAVE while a decision is being made. I don't foresee that it's going to last many, many more months. I would say 2 to 3 more max. So if you're in no hurry, you're not getting public service loan forgiveness, I would continue to stay in the program. That is my advice based on what I'm seeing, based on what I'm hearing. If you need help, we're available. Chat on our website, My LoanSense, email hello@MyLoanSense. We will provide discount codes if you need more information. If you're just like, hey, I've used LoanSense in the past, I have no idea what I should be doing. Well, I recommend you email us with your questions, and we will let you know if we can answer them or if we recommend booking a session at a discounted rate with us. Either way, we can point you in the right directions and let you know what the implications are for your next step financial goals in 2025 and beyond. Let us know if you have any questions. We're here, reading as much every single day as possible on what's happening in the student loan world. And if there's any urgent updates, you can count on us to receive them. Just like and subscribe to these videos. Hit the bell notification so you can see when we have new content. Have a great evening.